ETFs trade just like stocks. You can buy and sell an ETF just like you would a stock, but the difference here is when you invest in a stock, you're investing in one company. When you invest in an ETF, now you could be investing in dozens, hundreds, or even thousands of companies. And so this now gives you the ability to lower your risk, because if one of the companies in your ETF goes bankrupt, yeah, that might hurt your ETF, but it's going to be balanced out by all the other winners. Likewise, if you see a company in your ETF go really high, that will help your ETF, but some of those gains are going to be mitigated by some of the losers. So the advantage with an ETF is you no longer have to worry about trying to find and pick the best company. So you lower the risk, but you also lower some of the upside as well. However, if your goal is to build some steady cash flow and you don't want to go out and start investing in real estate, you feel like that's too much work, you don't want to have to build up all that capital to go out and invest in real estate, ETFs are a much more accessible way to do that, because now you can start investing into funds that'll pay you with cash flow with as little as $100. I mean, you don't even need $100 to start doing this, but that's just a kind of a rough number to get started. So if you want to start generating cash flow, that's one way to do that. But here's the key. If you want to win as an ETF investor, as a passive investor, there's two things you got to do. Number one is you have to consistently keep investing your money. And the key here is you want that to be passive, because now you want to invest regularly, whether it's every week, every 2 weeks, every month, regardless of what's happening in the markets, regardless of what's happening in the world. So if the markets are going down, you keep buying. If markets are going up, you keep buying. And this is where now you want to continually do this, because the goal is to keep continually building those assets. You want to keep continually buying those assets that are paying you with cash flow, because now every time you buy more of these assets, you're buying a little bit more cash flow. You're buying a machine that's going to pay you with a little bit more money. Every time you buy some, you're going to get a little bit more cash flow. You buy some more, you get a little bit more cash flow. So you have to be consistent. The only time you would change this, the only time, is if markets go down, you can potentially buy more, period. That's it. You're not going to sit here and try to time the market. If the markets go down, you say, oh no, I'm scared. That's not what the purpose of this. The purpose of this, the way that you win, is you keep doing it, whether the market's up or the market's down. And the second thing, if you want to accelerate your path to becoming wealthy, is that now when you get paid with that cash flow, you're going to take that cash flow that you get and throw it right back into the fund to buy more funds. So now every week you start buying some cash flow. You keep buying more assets that pay you with cash flow. Every week you buy more. Then 3 months later, and after 1 quarter, you're going to get a little check. Now, it might not be that big. It probably won't be that big, especially when you're just getting started. But instead of taking that check, this cash flow, this dividend that's now in your brokerage account, instead of taking the money out and spending it, you're going to put that money right back into it. That way you buy more. This way now you just keep consistently buying more of these asset producing cash flow, these ETFs, because now the goal is to do this not just for a month or 6 months or a year or 2 years or 5 years. If you do this for 10 years or 20 years or 30 years, now you're going to build a strong stream of cash flow that's passive on your end, and you won't even have to manage it because you're investing in the right funds, and you just need to start building that up. Start with $100 a week. Start with whatever you can. Maybe it's $10 a week. Maybe it's $50 a week. Start with whatever is accessible to you, and as you make more money, increase how much money you're investing. If you stick with this for 1 decade, you are going to surprise yourself at how much cash flow you can create, and you're going to build a whole new stream of income that's happening without you doing anything if you get started. But the key is for you to get started. The fourth place where you can invest your money if you really want to build wealth over the next 10 years are in growth funds. Let me give you a few examples and I'll explain how this works. Number one is QQQ, which gives you exposure to the NASDAQ. Number two is ARKK, ARKK, which gives you exposure to innovation. Number three is VUG, which gives you exposure to that traditional growth. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.